Okay, very good morning. Anthony here to give you the morning briefing. It's Tuesday the 24th of October, so I hope you all had a pleasant evening. Having a look at the markets this morning, what I'll try and do is quick overview of where we are. We just had some economic data coming out. These are the flash PMI numbers, so they are important. We'll have a quick summary of what we've just seen out of France and Germany. Then there's a couple of other things to look at from overnight. Performance of the Nikkei. And then I've got a bit of a historical fact for you to cover, which includes Nick Leeson. So I'll give you the story about that in a second. And then we'll look at Spain and then the day ahead. So that's kind of the agenda for the briefing coming up. So just going into the charts firstly and having a look at what's been happening. And as you can see, there's a little bit of dollar strength that's been emerging since UK and European participants have stepped into the market, so both major pairs seeing some moderate downside. It looks fairly aggressive on the charts, but overall, I mean, this has been about a 20 pip grind lower, having gone through pivot, which was some of the support points that we were seeing around that 132.15 handle to see out the end of the US session last night, so our time kind of going through from 7 to really 9 p.m. Likewise though, euro dollar is also below pivot, and then with some prevailing dollar strength this morning, gold has edged lower, back to basically flat, having been elevated overnight in the Asian session. And then WTI crude, there's not really been much in the way of headline new information that's come out for crude. I did see a comment just come down on Twitter where the Russian energy minister said to discuss OPEC cooperation with the Saudis at the November 2nd meeting, but again, that's nothing particularly new. If anything, this minor downside that we've seen materialize in the last half an hour, more of a byproduct, I feel, of the dollar appreciation rather than anything oil specific. So that's kind of how things are at the moment. A quick look then, let's go chronologically from what we've had from overnight, then we'll run into the data that's come out this morning. And one of the first things that you'll notice is the Nikkei. The Nikkei overnight, it is now a record-breaking 16th consecutive session of moving higher for the Japanese main stock index. Looking at this in particular then, the Nikkei finishing at its highest level since 1996. So if I was to put that on a chart, this is what we're looking at. So if I was drawing a line here, we're basically going back to that peak here that was seen in 1996. Now, as I mentioned, there is one chap who this level of price that we're trading at the moment in the Nikkei, it will be particularly prevalent for, because this is Nick Leeson when he went short the market. And well, let me give you a bit of a summary for those who aren't familiar with the story of Barings Bank. So the only reason this really jumped to mind was because I saw Nick Leeson tweet the other day, and he tweeted that the Nikkei is at its highest level since 96, probably not far off my break-even point, if only I had waited. So to give you a bit of a summary here of his actual trade. So basically what was happening was Barings Bank had a fund which they had used for any trading mistakes that they had. So obviously it wasn't used that often, but what Leeson was doing was that he started using these error accounts to hide his losses. So that was where it stemmed from. By 1992, his account losses exceeded £2 million. By the end of 1994, his losses were £208 million. Now, the beginning of the end occurred on the 16th of Jan 1995, when Leeson placed a short straddle in the Singapore-Tokyo Stock Exchange. What this basically means is that he was betting the Japanese stock market wouldn't move significantly overnight. And do you remember what happened? There was an earthquake, one of the biggest earthquakes in Kobe that had ever been seen in Japan. And basically, because of a natural disaster, it sent the Asian markets into an absolute tailspin. And obviously his bet was that there wouldn't be movement, completely against his position. And so his losses totaled $1.4 billion. So you think you've had a bad day, Obviously, this is an accumulation over a period, but in that one moment, his losses absolutely shot higher. That was on the 23rd of February, and then Barings Bank was declared insolvent on the 26th of February. So that's the story of Nick Leeson, who was tweeting just the other day, because he was just making a bit of a joke that if you look at where the Nikkei was trading back in '96, obviously it came back up to around a similar level in 2000, but we've gone all the way down to lows that were seen in '03, which were, we're looking at sub 8,000 level, and here we are back up at 21,500 again. So he was making that joke that I thought was quite funny. But looking at Bank of Japan, taking it into the real context of right now, obviously there's been a very interesting development in that from an election point of view, PM Abe could potentially, if all things work as he plans in the coming months, be one of the longest serving prime ministers Japan has had in a long period of time. What this does mean from a market perspective, having secured 2/3 majority in parliament, is basically continuity of Abenomics, which means that from a Bank of Japan policy setting perspective, this just means that QE, quantitative easing in a large scale, is only set in terms of market expectations to continue for the foreseeable future. Now, a report that's come out overnight is a Bloomberg source report which says that the Bank of Japan is considering to lower their inflation outlook. So this is the kind of usual drill, I guess, for central bankers before the big events. So like we were saying yesterday, before Thursday's key ECB meeting, it would be not surprising at all if today or tomorrow we get a Reuters or a Bloomberg source report giving you just a little hint of what we're going to get on Thursday, just to bet in expectations. So with the Bank of Japan, these sources are suggesting the BOJ may lower its forecast for core inflation from 1.1% for the fiscal year ending in March 2018. And so if they start lowering inflation expectations, what does this mean for quantitative easing? Well, it means that it's just going to cement the fact that most economists will think then that this QE on large scale in Japan will continue for the foreseeable future. This chart here just showing, stripping out fresh food and energy, Japan's inflation has showed little to any momentum at the moment comparative to other areas. If you're looking at the year-on-year percentage here on this chart, 0.2%, incredibly low. Looking elsewhere, a couple of other things to just speak about. One being Catalan, what's been the situation going on there. And so this was yesterday. Catalan Spain officials will not follow orders from Madrid. So the situation continues. Reports we were reading yesterday were saying that Catalan activists are considering mobilizing human shields near government buildings in order to deter Spanish government from taking control of the region. So you can imagine this definitely could be heading to a bit of a rerun of what we saw at the beginning of the month, with those kind of aggressive confrontations between the forcefulness of the Madrid officials in terms of via the police when they tried to disrupt that, what they termed illegal independence vote. So definitely this story's got some legs to run still in terms of its potential ramifications. But in terms of a timing perspective, I'm not really expecting too much today. Actually, it's going to be in the coming days when I think that this could start to heat up again, and particularly really the beginning of next week. So to give you the details, looking ahead, the full Catalan Parliament will meet this Thursday. On the other side, the Spanish Senate will debate Article 155 measures proposed by Rajoy at the weekend, and that's going to happen on Thursday as well this week, with final votes on Friday morning. If the measures are passed, i.e. what Rajoy has brought forward at the weekend, then the new constitutional powers would take effect from next Monday. And really, just having watched things like the Greek crisis in particular from several years ago unfold, it was really when the US started to pay attention when violence really started to break out, when the police were dealing with the citizens of Athens, that really the Americans started to pay attention, and we really started to see a bit of a pickup in negativity. So it'd be interesting come Monday, if all goes as Rajoy plans and constitutional powers do take effect, of how this is going to play out in terms of how the media will report this situation if violence does occur. So I wouldn't be looking for Spain for too much going forward today or tomorrow. Thursday, Friday could be interesting, but Monday I think is when it could rear its head again. If anything, at the moment, this morning, the IBEX is trading a little higher out of the get-go. One other thing to be aware of that's happened overnight, if you were looking at your Aussie chart or your Kiwi chart, you're probably thinking, what's happened from overnight? Well, really, it's a Kiwi-inspired move where the New Zealand dollar, you can see here, has come under some considerable selling pressure. Actually, the move you can see here was twofold. We actually moved higher initially overnight. This was because the Prime Minister outlined a planned increase to the minimum wage, but then we reversed very sharply because she then mentioned reviewing and reforming the Reserve Bank of New Zealand, so the central bank, and then we dropped lower. So that was the story overnight in terms of the whipsaw price action seen in the Kiwi, and we've had a pretty similar price pattern occur in the Aussie dollar, which is already well through its S1 on the day. Moving forward to this morning, we have had the flash PMI data coming out of Europe. So Vas and I were just having a brief conversation with one of the newer traders here about this, and there's a couple of key points you need to realize with the PMIs. Firstly, one is about timing. So with PMI data, this is two readings that you get over the course of a measured month. So the data we've had this morning is the month of October, and today's data arguably the more important because this is the flash reading. You'll then get in approximately 2 weeks' time the final reading, but the final reading is purely just a revision to the accuracy of the data that we've had come out in the flash release. So the flash release is always usually carries the more impact value, if you like. Now, the next thing is why the PMIs are important. Well, if you think about what the PMI is, it's a survey of forward-looking expectations. And this is what's absolutely critical to this type of current economic environment, about when we're trying to get a feel for what central banks are potentially going to do in the future. Then forward-looking soft surveys are absolutely critical to that outlook. The next thing, going back to kind of really the timing issue, is about when does the data come out. Now, the PMIs follow a very structured process of the French numbers are at 8 o'clock, the German numbers are at 8:30, the Europeans are at 9 in terms of the whole entire European area. Now, the European number very rarely moves the market. Why? Because it's the sum of its parts. And you've already had Germany and France, which make up the large proportion of that. Now, the French one can sometimes be market moving, not because the French economy is any more important than Germany from an economic output point of view. That's actually the opposite way round. Germany is bigger, we know that. But actually it's the market moves on future expectation. So if France is particularly strong or particularly weak, the market can already run with that quite often. The other thing is, and Vas was making a good point this morning, if you were looking at index stock trading, then don't forget that the composition of the Eurostoxx index is slightly more heavily weighted to France over Germany. So actually, if you were trading things like the Eurostoxx 50 index in the equity market, then certainly being aware of the economic data coming out of France does carry weight, irrespective of its economic contribution to the euro area in that respect from a broader macro perspective. So a couple of little nuances definitely you need to be aware of with this. Just giving you the charts then of what we've had. The French numbers were, what we're looking at here is the manufacturing number. 56.7 was a touch higher than expected, and really just confirmation of the trend that we've seen materialize ever since the second quarter of this year. If we look at the service number, that came out for France at 57.4, also a little bit higher than expected, and you just keeping track with the pretty solid performance we've had over the last 12 months. If we look at the German numbers, it's a fairly similar story. A minor beat in the manufacturing, 60.5 against 60.2. The service number was a minor miss, but still relatively elevated from the previous month. So overall, this is something you've got to be very careful with. We've just said the PMI flash data is important. Now, what can be misleading here if you're not an experienced trader is you go, we've just beaten the expectation, therefore I want to get long the market. If you look at these charts, and this is where your pre-planning ahead of data is absolutely critical, because if you look at every one of these charts, the current number does not detract at all really from the existing trends. I.e., yes, majority of these numbers have been slightly better, but they're only slightly better to validate the trend that already exists. So really, it doesn't change market's perception too much. What you're looking at, let's say taking this French manufacturing example, or this French manufacturing PMI as an example, if this number was weak, that would be a surprise, because then you've had a continuation of a consecutive period of almost 5 months where this has been an improving economic indicator. If that was to then suddenly weaken, well then this is interesting, and actually this might cause the markets to reprice their expectations slightly. So I think this is what's important when you're kind of developing your knowledge about how to navigate these data releases, is about doing the prep work in advance and giving yourself some context to the numbers that you're looking at is really important. Okay, a few other things I just want to touch upon before we wrap things up. Let me just see if this web page will update for me here. But what I'm going to bring up is a headline about a story from yesterday evening about Donald Trump getting, quote, very close to choosing the next Fed chair. Now, we talked about this quite a bit, so to give you a summary, because I was talking to some of our new traders about this yesterday and explaining who will be the next Fed chair, so I just thought I'd share with you the slide that I've been using during those discussions. And really it's 5 main candidates, but the one that we were talking about quite a lot yesterday was John Taylor, because originally it was a 4-horse race and now it's become 5. But in reality, I think you can discount Gary Cohn from the running. He's kind of fallen out of favor with Trump post the Charlottesville incident, which obviously happened about 2 months ago. Janet Yellen, Trump continues to kind of talk up that she's a potential prospect. A lot of the thinking seems to be leaning at this point towards Jerome Powell, as to add a degree of continuity to the markets. And he has been working with Janet Yellen, I think it's for the past 5 years now. So he definitely would be seen by the market in a sense of just taking the baton and pushing forward. But John Taylor was the interesting one because of the Taylor rule. Now, I did share this article with you in our Facebook group if you want to jump on there and take a read. But what this was telling you is that the Taylor rule, which in summary is a model of which he created, where if inflation is at a certain point and other measures of the economy, then it should equate to a formula of what interest rates should be at. And if you were applying the Taylor rule, the US interest rate should be at 3.75%. Now obviously we're only at basically 1 at the moment when it comes to federal funds rates. So hence the reason why John Taylor, even though one would think he would be much more pragmatic if he was going to become the Fed chair, the market will look at his background, his thinking as the reference point for how he might govern monetary policy, and so therefore he would be at the most hawkish end of the spectrum in that regard. Jerome Powell would be much more neutral. Kevin Walsh would probably be in between the two, and then Janet Yellen probably the most dovish. So definitely any snap headlines you get or sources further on that issue could well have some knock-on effect for movement in the dollar. Okay, quick look at the calendar for the rest of the day. You've got the manufacturing and service numbers for Europe coming up momentarily, so I'll try and wrap things up before then, 9 o'clock. But I wouldn't be looking for too much movement because this will be just confirmation, but generally speaking, of better data, like what we've seen from France and Germany. And then that's pretty much it for the morning. Going into the afternoon, we get the equivalent readings coming out of the US at 2:45 in the afternoon. You'll get Richmond Fed manufacturing as well, and then much later on in the evening, the API crude oil inventories, setting us up for tomorrow's Department of Energy release. Earnings-wise, from the US to be aware of, McDonald's, Caterpillar, United Tech, so these are some pretty big market cap stocks to just be aware of when they're coming out later on. And that's pretty much it for the moment. So currency-wise, hasn't really been too much to get your teeth into, because if anything, we're starting to see a bit of divergence now. So a bit of that dollar strength just breaking down. The economic data, as I say, has been broadly better than expected. So maybe that's just helped mitigate that slight fall through pivot in euro dollar. It's managed to reclaim that level, whereas sterling still remains a little heavy. This is not forgetting the fact that from a sterling point of view, although as I understand the markets kind of warmly received her commentary in Parliament yesterday, updating on the Brexit talks, but overall that's kind of a lingering weight, you would think, on the currency. But any further movement in the dollar, just be mindful of gold and oil coming under some additional pressure, because that's already been a prevalent theme so far this morning. Okay, that's it. Going to leave it at there. So any questions, just let me know in the chat room. Happy to help as per usual. The strategy report will go out at midday. I've actually got a couple of bank reports, ECB previews, so I'll send that out with the my strategy later. One thing Jimmy's just pointing out to me, just to close things off, the Bund just coming under some pressure. We've just gone through most recently the low that was seen yesterday. This is the Bund future, and consequently S2 just taken out. If you think about it, what the ECB are going to conduct on Thursday is tightening, i.e. they are going to be reducing or outlining the details of come 2018, the reduction of their QE purchases. The consensus being that of a reduction from 60 to 30 billion, however, over an extension of a 9-month period. But nonetheless, this is kind of the beginning of the end, if you like, for the QE program in terms of what the ECB's long-term agenda is. So maybe a little bit of pre-positioning to be aware of for the Bund as we go forward. Throw in the mix the fact that PMI data remains at really multi-year high in mainland Europe, particularly in the likes of France and Germany, which are driving the European economy. So all the more reason to validate the ECB to go ahead and make this decision on Thursday. So consequently, that's probably what's leading to a combination of those factors, a bit of weight in the Bund this morning, down about 40 ticks already. Okay guys, have a good day. Thank you.